Hey guys, it's Conrad Bobilek here, CEO of Investors Prime Real Estate and author of Australian Property Finance Made Simple. And today's video is on the topic which is, will property prices continuously rise indefinitely? And if so, what would that look like? And more importantly, in our lifetime, what will properties be worth in Melbourne, Sydney, Brisbane and major capital cities in Australia in the next 25 years? Because one of the arguments that I keep hearing is, well, property prices just can't double every 7 to 10 years. Well, I say yes, they can, because they've been doing so since 1901. And if you've come to any of my live events, I actually go back to 1890 with the property market in Melbourne, where in Melbourne you could have got a block of land in places like Brunswick or Coburg for something like £10, you know. And back then there was a lot of money, by the way. It was equivalent of $1 million probably today. But so property prices do double every 7 to 10 years. Not every property, yes, but for the major capital cities, there's definitely been a trend of doubling over the next, over the last 7 to 10 years. So a lot of people say, well, properties can't go in Sydney from 2 million now, from $1 million median price now to 2 million to 4 to 6. Well, yes, they will, and they can. The most important thing is to understand it's going to happen with or without you. It doesn't need your specific money for it to happen. And I'm going to talk about why that's going to happen and why there's no buckling in this trend. And I'll show you some cities around the world where this has already occurred. So if you want to look at what Melbourne will look like 25 years from now, I'll show you one I'll show you one city that you can look at to see the future of Melbourne. Bit of a disclaimer as well. Everything today is hypothetical, it's educational purposes only. I'm not giving any financial advice. And also, obviously, I'm not making any guarantees that if you listen to me, you're going to get any results. Just like joining a gym, there's no guarantees in life that you're going to accomplish your goals in the gym unless you do the heavy lifting and keep on going to that gym. Why should you listen to me as well? For those who don't know who I am, I've got a bunch of things that I've done. I'm a real estate agent, a mortgage broker. I've come from a very conservative background of financial planning and funds management. But more importantly, I'm a real property investor right now in Melbourne, buying properties, doing renovations. So I'm keeping it real, guys. You're getting information that's completely unbiased, and I have no agenda. I'm not a developer pushing a particular project or particular area that I want to go up. So this information is purely for educational purposes only, and do with it what you like. If you want to get a copy of my book, by the way, I recommend you jump onto bookonfinance.com.au or check out Amazon or any good bookshop around Australia. Now, at the end of this video, it's a very short video, by the way, I'm going to give you a special bonus, which is access to my online home study with $497 for those of you who want to take the next step and get more additional education, absolutely free, no strings attached, 12 hours of content online with a manual you can download as well. Absolutely free. Australian impending property boom. How the average cost of a house will surge to 6.3 million in just 25 years, and it's not Sydney that will be hit the hardest. So this is good news and bad news. Good news for homeowners, obviously, and property investors like myself. Bad news for people trying to get into the market, especially with what's happening right now in lending. So I'm going to talk about those challenges that people that are trying to get into the market are facing and give you some solutions. A couple of things that are very interesting about the Australian property market is that the whole market, the residential part of the market, is worth $7.5 trillion with only $1.73 trillion in outstanding mortgages. Now, so it's a very low ratio of mortgage to asset ratio, and this is why the market is so resilient, okay? It doesn't need to be, the exposure is so low to mortgages, it doesn't need to actually collapse when there's an interest rate rise or some kind of volatility in the economy. Whether we have a recession or a depression coming up on our books, it still won't affect the market. People will still not run out of their houses and sell them, because ultimately the Australian culture has an intrinsic entrenchment in home ownership. And that's part of our culture. So that's not going to change anytime soon. And this gives me a lot of peace of mind the amount of stability that there is in the market currently. This is a really interesting study that came out, and I'm just going to read some key points out for you. The average homes in Australia may cost up to 6.3 million in just 25 years, a study has revealed. Projections show the median house prices will reach that figure in Sydney by 2043, up from 1,030,000 today, which is very interesting. Think about the equity component that has. You're making another $5 million plus. Now, the report came out from Aussie Home Loans and RP Data CoreLogic. The survey predicts that the average home price in Melbourne will be 5.8 million, 2.9 million in Canberra, 2.5 million in Perth, 2.3 million in Brisbane. See the gap between Brisbane and Melbourne and Sydney? Now, people say that Brisbane is going to follow now and boom. Brisbane is not going to happen. I'll tell you why. Brisbane doesn't have a number of things that Melbourne and Sydney have. Number one, they haven't got the same population growth. We've got 120,000 people moving to Melbourne every year. Brisbane's got a small fraction of that, around 30,000 people. The biggest thing is they haven't got the wealth at the top. They haven't got those CEOs on $1 million packages in Brisbane, and they haven't got all the heads of all the major corporations in Australia. Because remember, the biggest contributor in Australia towards the GDP is the banking and financial services sector, number one, which is the financial services sector altogether with managed funds, banks and non-banking financial institutions. And the second sector is the mining sector. Okay, how we make money in our country is we export commodities to other countries. Now, all those heads of the corporations, all of them are located in Melbourne and Sydney. None of them are in Brisbane. And that's why the Brisbane market hasn't got that critical, heavy, top-end wealth that is needed to push up prices even further, and that's why the market is stagnating, and you're going to see a bigger gap between Melbourne and Brisbane and Sydney and Brisbane, which is evident in this report. Wages will also increase over time, but there is a lot of predictions that Australia will be one of the lowest growth countries in the world in terms of wage increases over the next 25 years. So based on the average values of houses going up by 6.8% per annum since 1983, the national average house would be approaching 3 million by 2043. But in terms of what we're actually earning, there's going to be a massive disparity between the growth of wages and properties. And guess what? It's going to be a massive gap, which means that the future wealth is going to be concentrated with people who own property, and the division of classes will be based on people that own property and don't own property. And if you want to look at what that looks like, look at Germany. 95% of people in Germany rent. No one can afford to buy anything. You got second and third generation renters now in Germany. The ones that were smart enough to get into the property market after the Second World War, which is when the country was virtually bankrupted, have cleaned up completely. And not only that, they use the initial investments to leverage other investments, because money makes money. So if you want to know what it looks like as a country where there's a massive gap between wages and property price growth, look at Germany right now in terms of the rental market, which is very interesting. So this is extrapolated median house values by 2043. Sydney 6.3 million, Perth 2.4, Melbourne 5.8 million. National average 2.9 million. Extraordinary, isn't it, when you think about it? And you know, this is 25 years from now, guys. 25 years will go like that, you know? And the difference between now and then is simply how many properties you secure and how well you do, you know, in your retirement or your wealth creation. If you look at apartments, same thing. Melbourne, 3.4 million, 2.8 million, Sydney, 3.4. I remember apartments just in the 90s, you know, selling one bedders in Melbourne selling for 100,000. Now one bedders are 450 to 650, you know, in the best suburbs. So, you know, yes, definitely, will apartments go up? Will a two-bedroom apartment in Melbourne be worth 2.8 million? I know that's currently like science fiction, because you can get a nice house in Kew or Hawthorn for 2.8 million. Yes, two bedders will go to 2.8 million. And if you want to know the future of our Melbourne property market, go to New York and look at Manhattan. I mean, there are apartments, there are two bedders in Manhattan selling for $5 million right now. And there are penthouses selling for $80 to $100 million overlooking Central Park. Now, Melbourne has been voted the most livable city in the world 6 years in a row. Why can't it be that price? You know, you look at detached townhouses in Manhattan near Central Park, right? You're looking at $30, $40, $50 million. So when people think, well, can a townhouse in South Yarra go from 2 million to 4? Absolutely, it's going to go to 4. And then go to 8, and then 16. And we'll just keep going. Remember, Melbourne and Sydney are no longer relying on the local economy and local buyers. We're an international commodity, guys. We're attracting millionaires from America, from China, from everywhere. Everyone wants to live in Melbourne and Sydney. So we're no longer competing just with wage growth in our cities. We have people coming in from outside with millions of dollars buying up some of our best real estate. And that's good news for you if you're an investor, because you're leveraging off that wealth. You're leveraging off their ability to buy properties and their ability to push up our market even further. So the question is, are you going to be part of it? That's the only thing. You've got to make up your mind. And I'll tell you now, in my experience, the next 5 to 10 years will be the definitive years which will separate people from home ownership indefinitely. If you miss the next 3 to 5 years and you can't get into the market, you might never get into the market unless you change your career and triple or quadruple your income. Because it is getting harder and harder for people to get into the property market, especially with the recent changes that APRA has implemented and the banks have executed in terms of tightening credit policies and changing all the algorithms. It's getting harder and harder to lend money. It was much easier 24 months ago to get money than it is compared to now. Now, interest rates are record low, but the benchmark rate that the banks use to work out your serviceability is 7.5% P&I currently, which is very high compared to historical rates. So what does this really mean for you as an investor? It really means that if you take time out and research the market and do fundamental analysis, these are some of the returns you'll be able to get in the next 25 years. Now, here's an example of prices 1993 compared to 2018. And areas like Mornington Peninsula, for example, property prices have done really well. They were $126,000, and now they're selling for $1.5 million. You have areas like Box Hill, for example, $150,000 for an average house in '93, $1.755 million currently. Now look at the growth on that property since '93 to 2008. I mean, that is a huge growth. Those 25 years growth is extraordinary. Now, can you imagine having a conversation with someone, someone like in Clayton, saying your house that's $108,000 in '93 is going to eventually be worth $1.2 million in 2018. What do you think that person in '93 would tell you? Conrad, you're crazy, you're insane. Who's going to buy them? We can't afford to pay our mortgage on $108,000 right now, and we're not millionaires. So what's going to happen in Clayton? All these millionaires are going to move in, and what's Clayton selling for now? $1.2 million. Imagine in Malvern saying to someone, your house, Mr. Home owner, is worth $245,000 in '93. Eventually, it's going to be worth $2.7 million. Do you honestly believe that person in '93 would accept the fact that their house is going to be worth $2.7 million? There's guaranteed they're not going to accept that. And did it happen? Well, it's a fact. Now, it's the same thing now. Do you believe that if I tell people in Melbourne their house that's worth $2.7 million is going to be worth $9 million in 25 years, do you think they honestly will accept that? There's no way they're going to accept that. They're going to tell me it's bullshit, it's not going to happen. It's impossible. Who can afford $9 million mortgages? Is it going to happen? It's guaranteed it's going to happen, in my opinion. And if I'm wrong, ring me up 25 years from now and sue me. By the way, with real estate, if I make any of these predictions and I'm wrong 25 years from now, I'll tell you what I'm prepared to do. I'm prepared to give you the original price that you paid for that property in 2018, any time of the day. So if you buy a property currently in Melbourne for $2.7 million, 25 years from now, if you haven't made money, come back to me. I'll give you the original price, like a brand new property. Imagine that, huh? Anyway, this is the same for properties in Sydney, the same ratio. You have key suburbs in Sydney that have gone up literally, a multiple of 10 times over the last 25 years, which is incredible. So the key thing is, beyond that, there's other reports showing that not only is property prices going, record high in Melbourne and Sydney, mainly because of population growth and mainly because of the extreme fragmentation of Sydney and Melbourne. I mean, there are key suburbs and areas where people just want to live, and there are areas where people want to avoid. Another really interesting study has come out from Korn Ferry 2008 salary forecast predicted Australians would have the lowest real wage growth of 97 countries surveyed, with an increase of just 0.7% per year. Wages in Australia are forecasted to grow by 2.5%, which is an increase of 0.7% in real wages when adjusted for inflation. So 2.5%, but when you adjust for inflation, it's just 0.7% per year. Australia will see a 2.5% growth, top line growth. A 2.1% inflation rate, which is still low, and we are very low currently. I mean, inflation should be around 3.5%, and 0.4% real wage increases. In New Zealand, they're looking at 2.5% salary increase with forecasts of 1.5% inflation, 1% real salary increases. So basically, you have a situation in Melbourne where the top 45, 90 suburbs are growing at 10% per year. Inflation's 2.5%, but wages are only growing at 0.7% above inflation. Do you see the disparity between wage growth and housing growth? So what's happening is getting harder and harder every year to get into the property market because of serviceability issues. Now, the last property cycle was finished off by high interest rates, up to 7, 8, 9%. This time around, it wasn't interest rates that finished off the property cycle. It was APRA intervening with the banking system and making credit policies and credit scoring a lot tighter, and that decreased the amount of money that investors can borrow and lowered LVRs. So money definitely makes or breaks the market without question. But beyond money, there's obviously the biggest growth factor, which is population growth. So another study that's very interesting showed the 10 most in-demand suburbs and houses in Victoria to target. So I'm giving you really good hints here of areas that you can target, and if you want to make maximum capital growth for the next 10 years. Number 1 was Warrandyte, followed by Hawthorn, Eltham, Essendon, then St Kilda, Fitzroy North, Richmond, Abbotsford, South Melbourne, Hawthorn East. Now Warrandyte is still pretty affordable, same with Eltham. St Kilda's always been expensive. I mean, Hawthorn's one of the most expensive suburbs in Melbourne. Abbotsford's always been very expensive, but there are still bargains in the eastern suburbs to get properties, and this is the most in-demand suburbs for Victoria. In terms of townhouses, these are the top 10 most in-demand suburbs for townhouses in Victoria right now. Parkdale, Mount Eliza, Bayswater North, Sydenham. I mean, Bayswater North is very affordable for townhouses. You can get a townhouse there for $550 for a 3-bedroom townhouse. Albert Park, Balaclava, expensive. Carram's very affordable. 3-bedroom townhouses, $550. 600,000. Blackrock's very expensive, Mitcham and Mill Park. So these are some of the areas that I just want to encourage you guys to explore as investors if you don't know where to get started in the property market, and definitely look at townhouses. So what are your options? We can do either nothing, and I'm going to categorize people into 3 categories. There's going to be people that are going to watch the game, there's going to be people that play the game, and there's going to be people that go, what the hell happened? And really, this comes down to you and your choice of what you're going to do. Or if you're the brand new generation, you're going to miss the whole thing by looking at your stupid iPhone, and the whole thing will just pass you by, which is what the new generation is doing, which I can't stand. Not the generation, people looking at iPhones. I mean, I was in a shopping centre the other day, and I nearly walked into someone because this is how they're walking there in the shopping centres. I don't know if you've seen those people who are just walking around. Look around you. Life is out there, not here, okay? Forget the phone. You'll still survive. So what's the next step? Next step is, if you want to get more educated about property, I encourage you to attend an up-and-coming workshop with myself, Stephen Molnar, Cameron Fisher from Changing Places Real Estate, and Stephen McClutchy, the Director of Loans Australia. 2 days, amazing education, nothing to buy, pure contents. We run 10 of these per year. They do book out really quickly. For those who are interested, scroll down below this video. You can reserve your seat in the next one. Just check the dates below. Day 1 is pure education on finance and how to structure your property portfolio correctly and how to create income for life. And day number 2 is very practical. We actually put you on the bus and we take you around Melbourne. We educate you on 6 areas that have very high growth, and we actually showcase some projects, and we do due diligence live in the trenches with the valuer, with myself, with Stephen Molnar. We've got decades of knowledge behind us, so it's really a practical workshop that really gives investors, and especially first-time investors, real tools they can walk away with that will make a really long-lasting change for them as successful investors. Now, Seating is strictly limited to 40 people, mainly because the bus only has 44 seats or 48 seats, and we've got staff as well. That's why these workshops are so exclusive, and they do book out really fast. For those who are interested, scroll down below, check the dates, and we run 10 of these per year in Melbourne. Also, if you want to get a copy of my book, just check out amazon.com or go into bookonfinance.com.au or any good bookshop around Australia. Grab a copy. There's amazing information there as well. As I promised at the beginning of the video, your reward for sticking through to the end of this video is this home study, which is valued at $497. All you got to do is scroll down below. There's a link there, and you can access that instantly. No strings attached, nothing to buy, and it's very easy to use. It's literally point, click, and play. Download the manual, and then just follow 12 hours of contents. It's absolutely free. Here is the link, and you can access that pretty much immediately, including a 265-page manual that covers the entire 12 hours of workshop. And it's very practical, hands-on information about what you need to know as an investor right now in the current market. That's it for me, guys. Thank you very much for watching this YouTube video. Make sure you subscribe to my channel. This is Conrad Bobilac. I'll see you on the inside.